We gather in conversation with old friends and new to face the climate emergency that threatens us. We come to learn and understand the problems in our present systems, from energy to food, to politics and finance, among many, that are broken and need to change. This is what needs doing. We encourage each other to share what we are learning and to practice our skills and strengths to find ways to bring about change. And we work together to put our faith into action, build momentum and fellowship in the work ahead. Welcome.
Thanks, Julie. And now we're going to have our host, Sylvia Soderberg, introduce our speaker for tonight.
I welcome you again. Thanks, Julie. That was wonderful, wonderfully said. It's my privilege and pleasure to introduce Scott Budde, who is a dear friend from long ago, from long years, I should say, who will speak on banking, investing, and the environment. Scott is founder, president, and CEO of the Maine Harvest Federal Credit Union, which was the first deposit-taking institution to focus on building a local sustainable food system, which is focuses on small farms in Maine. And he can correct me. Scott, correct me if I'm wrong in any of this stuff, will you please? He's a chartered financial analyst, and he brings 30 years of experience in banking and investment management to his efforts tonight. This includes pioneering work for TIAA, also known as TIAA-CREF. He is the author of a book called Compelling Returns, a practical guide to socially responsible investment strategies. Scott, would you take over, please?
Sure.
Welcome.
Yeah, thanks so much, Sylvia. And if you saw the picture on the Casey website, this is the dog. Just a very cute little black and white scruffy thing. Okay. Yeah, thanks very much. It's my pleasure to be here and talk with you about this. I should say maybe one of the things that qualifies me a bit to speak on the topic is that I am the child of leftist academics. So when it came time to rebel, late teens, college, graduate school, my rebellion was going into banking. So, which my father, as a good leftist professor at UMass in the education department, just thought was a little bit seemly. And the good brother, my older brother, did social policy research at the University of Chicago. So that's what you do if you're the good brother in the academic family. And fortunately, I've recovered from that starting about 15 years ago with work that Sylvia mentioned at TIA centered on social investing strategies, and then my current work creating a credit union focused on sustainable agriculture. But with that, Kent, should I just get started? Good. Okay, let's see if this works here. Okay, can everyone see that slide pretty well? Kent, does that work? Okay, I think the questions that, and I should say there will be lots of time for questions. If you feel you can't wait, just chime in, but we should have plenty of time at the end for questions, and I won't spend too much time burdening you with PowerPoint slides. But the questions that I wanted to focus on are pretty basic ones. Basically, are banks and investment companies using my money, your money, to finance fossil fuels? The answer is resounding, of course they are. And then another one, which is, what can you do about it? So it's really those two. And I'd start with, I think when most people think of their money and what they do with it, one way they think of it is, well, often in different types of buckets. And one system of buckets is what types of institutions are managing the buckets. And for most people, it boils down to three big ones: banks, investment firms, and insurance companies. And I'm really going to focus on this this first one of banks, partly because that's what Sylvia asked me to focus on, but also because I had some delusions of focusing also on investments, but I think they're a bit different as topics relative to, relative to environmental issues. So I'm going to start with banks. And so let's start with the basic issue of banks and the climate problem. And you can find a lot of evidence, but here's my first one, which is, this is a chart of what this climate report called the Dirty Dozen. And this is of all the major banking companies in the world. So this is not just, it's not the US, as you can see by the flags that give it a little UN or Olympics feel, but these are the top 12 financiers of fossil fuels over about the last 5 years or so. And you can see of the top 12, 5 are American, 3 are Canadian. I mean, so this is quite close to home. And the top 4 are in fact the 4 largest banks in the country. So there is buckets of evidence, and I'll just say, based on my work within banks and doing research on banks, the data that's out there about how they finance fossil fuels that is used in this report almost certainly underestimates what they do for this industry. They provide all sorts of other types of financing and services. They do foreign exchange, they move money around the world for them. They provide leasing, they provide all sorts of different services and financing beyond just what you might be able to find. And Sylvia did ask me, and I know many of you have followed Bill McKibben. I'm not a Bill McKibben expert, though I completely buy into almost every thesis I've read of his. And in fact, he has a pledge around getting out of some of these banks for exactly this reason of financing fossil fuels. And that pledge, and that pledge is both whether you're in the bank now and are willing to leave, or whether you've already left. And Sylvia asked me the question of, how do I know if my bank is a problem? And I would just say, if your bank is a large American bank, it's a problem, or it's part of the problem. And if that's not and in fact, you can do research. I would encourage you. There's not a lot of, it's harder research to do than you think, because a lot of the public filings of these institutions don't contain all the data you'd want. And in fact, a lot of the data in that chart on the left is from the investment banking operations of these banks. But I would just assume if you're in a large bank, they are part of this industry, because the industry is a large part of the US economy and they'll be involved in it. Kat asked me for something, just to be to increase the shock value. So just in case the environmental stuff isn't enough, these institutions can be pretty nasty in terms of how they operate. And one of my pet peeves is when any paper confuses millions and billions. But I just want to emphasize that when it says up here, Bank of America paid $83 billion in fines since 2000, billion with a B. So it's a lot, and it's all over the place. This is apart from what you think of their environmental policies. Their records in the community across a wide range of issues. And it's kind of small print, but these issues include consumer protection issues, financial offenses, basically breaking the rules, financing inadvertently things like money laundering or something like that, or criminal activities, employment offenses, competition, offenses, and government contracting offenses. The offenses are all over the place, and you can see the CEOs are all paid pretty handsomely. And if all of that is not enough, these things, I hope there are lots of glaring examples, but I particularly like this one. This is an example of Bank of America and Line 3. And Line 3 is a pipeline that will bring tar sands oil from Western Canada to the US. So this is the dirt, basically the dirtiest type of oil you can use. There's a little map of it. And I mentioned this not because this project is unique, because there are lots of projects like this that are financed by large banks all over the world, but B of A renewed financing for it while they were sponsoring New York Climate Week. So I just thought the level of, hypocrisy was just at an exceptional high that made it a little bit more glaring. But I think you could poke into any of the large banks and you would find quite similar things. And again, the energy sector and the fossil fuel sector within it is quite large part of the economy. So it's not really surprising that large banks would be so involved in it. But they can do a lot more. And there have been cases where they have altered their behavior in response to consumers and pressures. So I think the Bill McKibben pledge of trying to get people out of these institutions, can be one of many strategies that can change their behavior. So what's the solution? Well, I would agree with Bill, and I've done this personally, which is, move your money. And I would say, tell the banks, tell anyone you can about why. And you can do it either on your own, but you can do the pledge, which is at Bill's organization, which is 350.org. And in general, where would you move money? And I would say the guidelines are pretty simple. Smaller institutions, and I know $20 billion seems like a lot in assets, but that's a pretty small financial institution in the US. Looking for cooperative structures to moving money into a credit union or a mutual bank. And then another option is staying either very local in that credit union or mutual bank, or looking for institutions outside of your local area that have some strong sense of mission that aligns particularly well with your values. And where are those examples? And I basically followed the same three buckets of where you could put it. And I picked Massachusetts as an example, just because I assume most of you are in or around Massachusetts. So, and in Massachusetts, there are 328 credit unions, 80 mutual banks. And then I had a couple examples of mission-oriented credit unions and banks, not in the region, but ones that are doing great work nationally. And I'll warn you that number 3 includes my self-promotional bit. So within credit unions, they're the 3 largest credit unions in Massachusetts: Rockland, Metro, and Digital. Metro, I believe, is headquartered in Chelsea. Rockland is obviously in Rockland. And Digital is, I think, somewhere in 128. And Digital is the credit union that came out of Digital Equipment Corporation. So those are large credit unions that provide every banking service you could possibly need, including very robust online banking platforms. Mutual banks, New England and Massachusetts in particular has a very strong history of mutual savings banks. Here are the 3 largest: Cambridge, Cape Cod, and Eastern Bank. And Eastern Bank, I believe, is headquartered in Lynn, but most of them have branches, in other places. Again, they would have the full range of complements of anything you need from a banking relationship. And then lastly, and I'll spend a little more time on this, on some specialized mission-oriented institutions. And I'll highlight not my own first, but Clean Energy Federal Credit Union, which is located in Boulder. And this was a credit union created just a few years ago to finance solar installation, residential solar installations. They're mostly in the Midwest and Plains and Rocky Mountain states, but they're expanding pretty rapidly. And you could, for example, put a CD into Clean Energy, and you would have 100% assurance that your money is going to finance renewable energy. Sylvia mentioned a little bit about Maine Harvest, our own credit union, which focuses on small scale lending to farms and food businesses in Maine. And then I'll highlight a bank, actually a Beneficial State Bank, which is headquartered in Oakland, California, and focuses on low income populations with some very unusual progressive lending programs, also environmental issues. And Beneficial State Bank is a very interesting bank because it's owned by a charitable foundation entirely, which is a very, very unusual structure and gives them a lot of flexibility. It's actually owned by the foundation that was started by Tom Steyer, the former Democratic presidential candidate, and his wife, Kat Taylor. So it's a very interesting structure. So there are a lot of options out there, but let me, so I've got a little sideline into a little bit more about credit unions. And there is a lot of data at a state level about credit unions, and they are quite a good deal. And in Massachusetts, they typically are cheaper for car loans, they're cheaper for home equity lines of credit, they offer higher rates on CDs, they have lower closing costs on mortgages. Not massively large differences, but when you put it together across the whole economy, they really add up. And that's because credit unions do not have shareholders and have a very strict cooperative status, meaning that they are really run by and for their depositors. And that tends to be a very good deal. And they tend to be quite, in my experience, quite personable and very strong on the customer service front for kind of similar reasons. Credit unions, this is a little bit of ancient history, but over the last 25 years, this is a graph of the share of basically financial assets in the banking system that are held by the top 100 banks, all the other banks in the market, and credit unions. And you can see that since it goes back to 92, the market share of big banks has increased dramatically from, it's now really close to 75% of the market is held by the top 100 banks. And then if most of that, of course, is held by the top 10 or so. And that's been largely at the expense of community banks. The community banks have been decimated during this time, and they've largely shrunk. So the ones that are left, I think stand out even more. And then credit unions over that time have done pretty well and have gradually increased market share, but are still relatively small compared to other places. And I just want a little footnote about why when you step out your door in downtown Boston, or King's Chapel store, maybe in downtown Boston, why don't you see more credit unions? And the answer is because in states with a lot of money and wealth, the banking lobby fights their expansion dramatically. So they prevent credit unions from expanding into some of the wealthiest areas of states like Massachusetts. In states like Maine, they don't really care that much. So credit unions just kind of go wherever they want. But they're fought tooth and nail in larger, wealthier states in the country. Okay, so that's enough of my credit union spiel. And I just thought I'd paraphrase whenever I've talked to people about this, what I might hear. And you often get a couple of responses here too. One is, but it's really easy using the big bank branch on Boylston Street, and Chris always recognizes me and always says hi. I use their ATMs, which are everywhere, and I have all these auto debits and direct deposits that are impossible to change. So I hear you. I kind of said something like this when I lived in New York, and I banked with one of the aforementioned institutions, and I experienced significant self-loathing, which is not productive, as you know. And I did self-loathing until I developed a strategy, and my strategy was this: keep your big bank account, but move excess money to someone else. Pick a good, send it to Clean Energy Federal Credit Union in a 1-year CD, or Maine Harvest, or Beneficial State Bank, or there are lots of other great mission-oriented ones. And put your excess funds there and just stick them there. Don't borrow from the bank. Don't use their debit card. Tell them why you're moving funds out. Keep the account. Say hi to Chris whenever you want, and you can see me for other strategies. So, don't feel like you need to do everything. You can do just a part, and putting a CD in someone like Clean Energy Federal Credit Union and having it be more than what you've got in your big bank is a great place to start, and even end up. It would, have significant positive impact, and you would feel much better. Another one is sometimes Americans just go crazy about ATM fees in particular. And I just want to point out that most credit unions, including the ones, those 3 larger ones in Massachusetts, are part of a network of credit unions. Most credit unions share their ATMs with one another. And in fact, you can use them without paying a fee. In Maine, for example, all of the credit unions share their ATMs. I can go to any credit union, and it's as though I'm working with my own credit union. And you can do that across the country. And in fact, that network of ATMs is one of the largest, if not the largest, single free network of ATMs in the country. So you can use that network. And that is one option. You can also use the branches to make payments on loans, just like you're using your home credit. It's a fascinating example. And then, as I said in the last bullet point, you might just eat a few ATM fees. If you switch from your big bank, you'll probably save money somewhere else, and take money out of the supermarket. So those are the 2 common and kind of just practical banking things that I've heard often. There are loads of other solutions with regarding your, what to do with money, apart from banking, but kind of related to the banking and investment world. Well, certainly within the financial world in general and activism, you can move investments. And I would guess that the vast majority of people on the call probably have more money in their investment accounts than they do at their bank. You might have them at an investment manager of the bank, but and that's a kind of another topic for another day if you'd like to talk about it. But you should know that, for every mutual fund at every investment firm that owns stock, which is most of the funds at most of the managers, they are voting every year on important issues. And many of these are environmental and social issues that you would care significantly about. And they vote on those. And I can tell you, many of them are not voting the way you would want them to vote. And I put at the bottom a great organization called As You Sow, great religious reference there, which is a organization that tracks how investment managers vote and organizes campaigns to sometimes around a social or an environmental issue that might come up. And there now have been cases of votes that have actually passed and forced institutions to change their behavior a bit, particularly on the environmental front. Okay, there are renewable energy funds. There are all sorts of investment options, just of like stock funds that specialize in renewable energy companies. There are also some lesser known funds. I personally have a bit of an IRA in a fund that was actually started by a local solar energy company to help them finance the investment of solar panels in small municipalities in Maine, on the roofs of local town libraries and town halls in small towns that might not easily be able to go out and borrow money very cheaply. So there's some unusual options out there. And then there are, on the activism front, there are certainly campaigns, and 350.org probably has as many, as comprehensive of a list of campaigns you can get involved in on the environmental front as you could want. And then just physically, I mean, heat pumps. These are all, to me, I've looked at many of these options as ways of investing my money. I mean, Maine has a pretty generous crediting system if you put in solar. I look at it as just, prepaying my electric bill, or an alternative to, money that might sit in a savings account. And I think that's a very reasonable way to do it. Massachusetts, I know, like Maine, has pretty good options for community solar. So if you can't have solar cells on your own roof, or you can buy into solar panels at one location that's been developed by a company, and then they sort of sell shares in that. And then finally, I would guess that many of you are involved in other nonprofits or local governments that could take advantage of installing solar. And this, in my experience, it's often one or two individuals within a town or an organization that really prod that organization to go out and do something. And there are ways to utilize the tax credits, even if you're working with a nonprofit or a government. Let's see, I wanted to get through those slides pretty quickly so we have time for questions, and we have plenty. So let's see, I'll stop sharing. And Kent, do you want to start corralling questions if there are any?
Yes. Let's stop. I think maybe I can do that for you. Okay, well, thank you so much, Scott. Lots of information there. And I think I, for one, would love it if we could get a copy of those slides, and we'll post them on our website so people that want to follow up on any of your links can easily do so. So does anybody have a question? Why don't you raise your hand or give the reaction signal as your preference? Anybody have a question? Well, let me start with one. Okay, Sue, I think you were first. Yes, first you need to unmute.
Okay. Hi, Sue Stafford from Mothers Out Front. A question about moving your money out. There's a lot of controversy that I've heard, at least, saying rather than urging investment managers to divest or taking your money out, you're better leaving it in where you have a voice and you can go in and talk to Chris or whoever it is. And I'm wondering about your thoughts on that. And the other thing is, I just hope everybody is aware of an organization, a national organization called Stop the Money Pipeline. If you Google Stop the Money Pipeline, they have a lot of campaigns against banks, insurance companies, and investment asset managers. But it's the engagement versus taking your money out question that I'm curious to hear you speak about.
Sure. Well, so this would mainly be in the investment world. So within banking and like your deposits that you might have, you don't have a voice in the governance of Chase or Wells Fargo or Bank of America, by just having a deposit there. So in terms of your deposit relationships, you kind of can, it's kind of take it or leave it. But on the investment side, if you own stock or you have a mutual fund that owns stock in those companies, you're absolutely right. You could, and this is a perennial debate. And I used to be very preachy about what kind of strategies affect change the best. Like I knew. Well, I thought I would know. But it's very hard. It's very hard to say what strategies work when. I'll just mention as an aside, there's a book, it's probably out of print for a long time, called Loosing the Bonds. and it's about how apartheid, about the demise of apartheid in South Africa. And why did it happen? It was it's a long, the thing's like 900 pages, looking at why did that actually happen? What were all the things that happened? And, you know, they looked at divestment, they looked at engagement, they looked at all these strategies, and they basically said, the conclusion is basically, it's the sum of the pressure of all of these strategies that just kind of, you know, build on each other. And that's what created change. I would say, you know, so I'd actually be pretty neutral about those two options. If we're talking about investing, and you have the option of impacting their vote. If you gravitate toward activism and are willing to own the stocks directly, and you need to own a certain amount for a certain period of time, I would say have at it. There, you know, the nuns who've been doing this for 50 years are amazing. And there are, you know, and that is a great strategy. If that's your, you know, if that's your kind of personal proclivity for impacting things. If it's more, I just don't want to be associated with these institutions, then, you know, you kind of, I'd say sell it. But there are certainly examples of engagement where there are environmental issues that are passing because enough large institutions know that how they need to vote and they see it from their individual investors. I'm sorry, it's a bit of a non-answer, but.
Oh, no, that was good. Thank you, Scott. So I think in the queue, Dory, Helene, and then Pamela. So go ahead, Dory, you should unmute.
Scott, thank you for your presentation. It was fantastic. I have so many questions to ask you, but let me just ask one. What should we do about credit cards? Is it the same advice as you have about banks?
Yeah, I will confess that the only tie I have to one of those institutions happens to be a credit card because it works better outside of the US. But I think I have an account with a credit union in Maine where shockingly the credit card company, a small credit union does the credit card servicing. So I would say the same thing, and they make a boatload of on credit cards. So I would say the same thing. And you have a lot of alternatives, including, you know, all sorts of alternatives that will give points to organizations and things like that. But if you don't change, whatever you do, don't borrow money on it. Whatever, I mean, probably you all don't want to anyway, but that's how they make most of their money. Charge as little as possible, pay it off immediately, don't borrow.
If you have any references to credit cards of that nature, Scott, it would be.
Oh yeah, let me look at a couple.
Yeah, maybe put them in the slide, because I had the same question. Okay, I think Helene is up next. Helene, you'll need to unmute.
Thanks for the presentation, Scott. I was curious, Sovereign Bank is pretty large here in Boston. Do you know anything that they didn't show up on your list of banks? They're a bank out of Spain, I think their headquarters are. Do you know anything about them, Sovereign Bank?
Oh, Sovereign, they're owned, I believe, by us. Yeah, I think they're owned by a big Spanish bank, but I don't know anything in particular. They will appear, I believe, on that climate report at the beginning, because I'm sure their parent company is going to be in the top 100 or so banks in the world.
Thank you.
Sorry, nothing specific though.
Okay, thanks, Elaine. Pamela.
I just wanted to make a plug for avoiding ESG labeled funds, because they're all pretty much, as far as I can tell, greenwashing. And if you can, buy individual issues, particularly Tesla, because it is being actively suppressed by short sellers and the fossil fuel industry, along with the automobile industry, union, government people. And it won't be suppressed like that forever, because it actually does so well. It's a United States manufacturing company in entirely green industries, multiple industries. You can get a highly diversified investment with one company by buying Tesla. You also get solar energy, you get battery development, you get manufacturing, you get
Pamela, if I could interrupt, do you have a question for Scott?
are there other companies like Tesla that are absolutely no risk in terms of bad investments
Well, there
environmentally?
is no stock created ever that I would say is no risk or even close to it. I think every,
No, I don't mean
investment.
financial risk. I mean risk of helping oil companies, for instance.
oh.
You can't buy a fund. You can't
Yeah,
even
I would
buy
look
the,
at- there are, I can put
index
this in
funds.
right. There are a couple of exchange traded funds that will allow you to invest in a basket of solar and renewable energy companies that might be pretty close.
can you like put them in the
Sure.
chat or something?
Sure.
Thanks.
I'll put it in the slides.
Okay, thank you, Pamela. Let's see, who's next? Sylvia, I think you had a hand up initially, didn't you?
Scott, I think we've talked about this a little bit, but I, as you know, have a credit card with Fidelity, which is abhorrent, I'm sure, but it's the one that every time you use the credit card, you get credits or you get points, and that adds up to lots of money over time for your grandson or somebody's college education. It has, is it 429? I'm not sure. It's a number. It's
529.
well, what? Yeah. So, is there a way to get out of that? Well, I don't really know what the penalty is for getting out of it, but I don't want to lose even a buck if I don't have to, because I've got 2 grandkids who are probably going to want to get advanced degrees. Do you have any suggestions about that?
Yeah, I mean, so 529 plans work differently in different states. And I would guess in Massachusetts, you know, the state has only certain investment options. I don't know if Fidelity is the only one, but it might be one of only a few. And I'm not sure if does Massachusetts have a state tax deduction for 529s? Because if they do, there will be nothing equivalent that would be as good of a deal,
Right.
as that. I think that might be.
Well, you don't pay a tax until you withdraw it.
Do you get any little credit when you put money in? Do you get a little credit on your taxes, anything like that?
I don't know, because I
Some
haven't
states you do.
since the beginning,
Yeah, I mean, well, there are lots of credit cards that would just give you cash back.
Yeah,
And you could then take that cash and put it into the 529 plan. It's not as kind of painless as just having a little bit go in with every transaction, but you could certainly find cards that would give you cash back, and you could just set it aside and put it in once a year. Would be
that's
an
a
option.
thought too. Yeah, get another credit card and hoard the money.
Yeah,
except
I
you pay
will.
taxes on that.
I will add for on the proxy voting and front, Fidelity has probably one of the worst records of any major institutional investor.
Well, I'm so proud of myself
so-
for having that. And you told me at the time, you told
Sorry
me,
about that.
you said,
So-
no,
And when
I,
I say bad, what do I mean by bad? usually it means that they have a tendency to just vote the way management of the company wants them to vote, right? So
Yeah.
if a proposition comes up that says, we don't think ExxonMobil should drill in the Arctic National Wildlife Refuge, ExxonMobil thinks that they should, and so they say, we think that's fine. And a lot of managers will just agree with management, which is how a lot of problems in the American economy persist, is because these big investment firms just vote along with management.
I
most
would
of the
like to
time.
put in one thing. This is not question, but it's just comment. My financial advisor way back many years ago advised me to get the Fidelity 529. And I went ahead and got it because he said so. But one thing that we can do is talk to our financial advisors. And I think that I'm going to have a nice conversation with Mr. Helmuth to kind of acquaint him with my feelings about this.
Why
So,
not?
thank you.
Also, just so you know, the states pick the investment managers for the 529 plan. So there is, and I'm on the board of the organization that does it in Maine. So this is controlled by the state. So your elected representatives are in some way responsible for picking the investment firms. So they've picked Fidelity. They can change, they can move it, they can put it to someone else, or they could tell Fidelity to create other accounts or vote differently, or they have a lot of power. I'm sure it's an enormous plan. I'm sure Fidelity cares a lot about it. They could do that.
Thanks.
Great, thanks. Anyone else?
I may have another question.
Well, let me ask one. This is something I talked a little bit with Scott about before this talk. Part of Bill McKibben's current campaign is for people to sign a pledge that they will withdraw their funds from the top end banks that are financing fossil fuels, but not to do it immediately, but rather to sign the pledge and say, if you don't do something by January, then I'm going to pull my money out. And Scott wasn't sure he agreed with that strategy. So I wanted to ask him, what is your thinking on that, Scott?
Well, I felt better because when I went to the pledge, there's also a button for people who've already moved. So I felt a lot better about that because I could just click on the other button. Well, after saying that I don't want to be too preachy about what strategies work or don't, I shouldn't be, but
do it anyway.
well, I would be, I can't, it's just not possible to me that they will withdraw from all of these activities that quickly. I mean, they've withdrawn a lot from coal, and coal took a long time. So, I mean, I guess I do it in take the pledge. I'd be prepared to do it. Because the issue is, if you pledged, people say they're going to do things all the time that they don't do, right? So if 100,000 people pledge that they're going to get out of B of A or Chase or Wells Fargo, if they don't do something and then they don't do it, and then the bank doesn't do what you want them to, and people don't switch, bad signal.
Doesn't help.
People are, including me, I'm lazy. I mean, I say I'm going to do things and then I don't do them. So I think that would be, will people do it? Will it create the leverage? But, maybe it will. I could be wrong.
Okay, thank you. Anyone else have a question for Scott?
One more, can I?
Go for it.
Can you tell me more about this beneficial, which is owned by a charity? I can look it up, but if you can tell me anything, I'd love that.
Yeah, I'm not sure I can say too much more about it. I know them because I've worked with them on a deposit program when I worked at TIAA, and I've met Tom Starr's wife, who's on the board. they created it because they didn't see a for-profit bank structure that they liked. So it comes out of a very interesting place, and they have invested hundreds of millions of dollars of their own money into it. And while they control it, the foundation controls it, I think the environmental and social stewardship qualifications of them to control it the way I think you'd want are quite high. They'll have a great, I believe they have a great impact report that is worth looking at if you want to Google the beneficial.
I've got it.
state
Yeah,
bank
I've got it up
impact
here.
report. It'll be it'll be the most progressive report of its kind that you'll see of any bank in the country, I would guess.
So you could put money into that bank in the kind of aforementioned savings account.
Yeah, put it up to the put enough in so that you stop feeling bad about working with the big ugly bank that you have to work with. That's the rule. And when you get up to that point that you feel okay, then you're done.
I don't have that much, but I could
Well,
feel,
then, $1.50. I don't know what it is,
I know.
We've got two more questions coming. Russ Miller, you're next.
One question I have is a question about mortgages, existing mortgages. I'm at 3.25 right now with one of the polluting banks. What do I do?
Ooh,
Because I can't find anything under 5 or 6% now.
oh dear. I don't know. Wait. Yeah, you're not, well, you were. Yeah, I mean, I'm a big fan personally of formulas because people often just, they're faced with these dilemmas like, I don't want to move from this big bank because it's such a pain, or like yours. I would say, well, okay, if you did keep it where it is and say, well, what's 1% of my mortgage? And then take that 1% every year and start a deposit somewhere else. Something like that. And that gives you a guideline for, what you might do with it. Getting out of it is, would be extraordinarily expensive. And there are lots of things that you could do with that money to remediate the guilt of the big bank in a positive way.
All right, thanks, Scott. Dory, you had a question.
Yep, Scott, just if you could speak more about the investment portfolio of a typical credit union, or the other way to put the question is, if one is looking for a credit union, how does one screen that institution, for a sense of what it's doing with its investments?
Right. Yeah, I mean, yeah, great question. In general, most credit unions are relatively small. The largest credit unions in Massachusetts, for example, are still very small compared to those community banks, the largest ones. So most credit unions, their lending and their lending options are their loan portfolios are quite local. It's very rare that credit unions they're quite local and they're quite consumer oriented. So credit unions don't tend to do too much commercial lending at all. I don't want to say never, because look, they could maybe buy a bond of a fossil fuel company. It's possible. But I'll tell you, most of their investment portfolios are quite conservative, and most of their lending is local and it's consumer oriented. So in general, you're quite safe. That in the slides, there's a little link to Research a Credit Union, which is it's the site of the regulator, the National Credit Union Administration, and it can lead you to all sorts of gobbledygook on any credit union you want to look at. But in general, they're so local and they're so consumer oriented it's just not, it would be rare that it would, that I think it would be quite rare that you'd find a problem with a credit union.
Terrific. Thank you very much.
My pleasure.
Well, great. I think that concludes our meeting. Did you have a question, Faith? Did you want to ask something? Go ahead.
Not really a question. I'm an ignoramus for most of what you folks are talking about, but I signed up for this basically because Scott was a member of the choir of King's Chapel, and because he's a person of integrity who's dealing with a subject that everybody needs to know about. When you're out. But what I'm commenting on and questioning is how many people within the financial world and credit world and all of this think like Scott, and how many are perhaps sort of caught. They need a paycheck to feed their families, et cetera, et cetera. And it seems to be with all these big companies are all employing people. It's a slow movement to get it all done, right?
Yes. But before I answer that, I have to give my favorite Carl Scoble quote, which since you're, given your marriage is important, which is Carl married my wife and me, and before we got married, we were going all through all the logistics, but he never asked us any questions about like getting married or anything. And I asked him, well, why haven't you asked us about getting married? And he said, that would imply that marriage is a prudent institution, and it's not. And that was the marriage counseling we got, and that has stood us very well for 34 years. Well, Faith, yeah, I mean, you're right. I mean, it takes I can give you, so let me give you some anecdotes of hope. When I started doing social investing really actively within TIA, I had people in my investment peers come to me like I died and be like, and are you sure you know what you're doing? You're like, I was a crazy person, right? And when younger people came to me and asked for career advice about going into social investing or responsible banking or this wide range, I had very few options for where to direct them, for resources or companies they could work for. There are now a lot of options for where they can work. There are a lot more. So what used to be a huge gulf of just this giant mass of, evilish institutions, and then just the small niche players, there are a lot more options out there. I mean, there are many, many more options. And look, even these big banks and big companies have, there are lots of evidence. There's lots of evidence of them changing their behavior because of pressure, and because I think of employees who increasingly don't, they want to be associated with a company that has responsible investing and banking priorities. So I think there's a fair amount of hope. I would say the last 15 years, it's dramatically different and better in terms of what's available for people to do as jobs that are more aligned with their values about either social values or around the environment or something like that.
Thank you, Scott.
Yeah, my pleasure.
Yes.
That's the answer I was hoping for.
Good.
All right, well, let's all thank our speaker. I think it was
So much, Scott.
wonderful, very, very useful. And we'll be
My
having a
pleasure.
talk. Next month, we're going to have the Conservation Law Foundation give a talk, which you'll
Excellent,
hear more about.
excellent idea.
Okay, well, thank you, everyone. Have a great night. We'll see you again soon.
Thanks.
All right, Scott. Good night,
Thanks.
Casco. Good night, Shari.
Thanks. Yeah.
you.